And good afternoon or good morning or good evening, everyone. Thank you for joining us today. We are live now. If you have any questions, well, first of all, welcome to FinTalks. Today we're talking about collaborating with FinTechs and the response to COVID-19 with Mastercard. Thank you again for joining us. Today, basically, we're going to be featuring a very prominent FinTech-based speaker from our ecosystem. And today we'll start with a 30-minute presentation and talk, and then we're going to feel free to submit any questions you have. You can do that in the question and answer tab that you'll see at the bottom of your screen. Please make sure you submit them there so that we can answer the questions either along the way or during the presentation. And if you have any questions and we don't get to them, please contact us on info@bahrainfintechbay.com and we can respond there. In the tech world, disruption is not just the norm, it's the goal. Perhaps that's why so many fintech companies have leaped to tackle the challenges posed by COVID-19. Which has so rapidly and radically changed the way we live our lives. They're putting their technology, their expertise, and relationships to work to protect people at their most vulnerable and to help reshape businesses and services for the recovery ahead, and partnering with them is critical. In this webinar, we will discuss the ways fintechs are responding to COVID-19. But first of all, to introduce myself, I am Susie Zira, and I'm the head of communications for Bahrain FinTech Bay. And with me is Shyam. Shyam Mohan is the Start Path Partnerships Lead for Middle East and Africa at Mastercard. Welcome, Cheyenne. He is responsible for the program in the region to identify, mentor, and partner with leading later stage startups and connecting them with Mastercard, as well as their customers to jointly build the future of commerce. Hi, Cheyenne. Welcome.
Thank you, Susie, and welcome everybody for this interesting session. And thanks for hosting, Susie.
You're more than welcome. We're excited to have you. Please go ahead and.
All right, great. So, once again, thanks everyone for joining. Just a quick intro about Mastercard. I'm assuming you would know the brand name. So we are a payments technology company. We've been here for over 60 years, and traditionally we used to look at providing network and technology for card payments as is known. But then we are now a multi-rail company looking at new types of payments, new type of technologies that are available, targeting both our traditional and new customers. So today, again, in light of the current situation, the topic is about how we collaborate with fintech startups and what are some of the trends that we see. How can we leverage some of the trends that we see, work together in order to create something meaningful, which is obviously relevant for the current situation, but also something that is sustainable in the longer run. So the way I'm structuring this session is I'm going to talk about some of the interesting, changes that we've seen in the fintech community as the crisis began and as we go through it, what was expected as we entered into 2020. So all of us were quite gung-ho about 2020 as a year. We had a fantastic, 2019, everything was going really well, and we entered into 2020 with as much optimism, if not more. And then, a couple of months later, we find ourselves in an unprecedented situation, something that we had not accounted for, something that we did not think about, something that we were not prepared for, right? And with every challenge comes, the opportunity to do new things, do meaningful things to address the situation. And that's what we've seen happen in the fintech world as well. So if I'm just flicking through my slides as I speak, and as Susie said in the session, if you feel like you have any questions, please do type it into the chat at the end of the session, depending on how the conversation is going. But do feel free to reach out in case your questions are not answered, and we will be happy to address them. So coming into the core of the topic. Looking at the past 5 years between 2015 and 2019, as you can see from the slide here, the VC funding into fintech has grown significantly. So in 2018, there is a slight, difference because we've excluded one major deal of Ant Financial. But apart from that, if you look at it, 2019 was a bumper year with $35 billion of VC investments going into fintech deals, right? And it was supposed to grow even higher in 2020. At the start of 2020, we had anticipated 4 key global trends. And the reason why I'm highlighting this is these are the trends that I am going to, talk about how the situation has caused changes to. So when we began the year, we said, any fintech startup uh, who are like there are a lot of fintech startups coming up who enable any startup to become a fintech company. So I'll talk about these in detail in a bit. The second one was we saw a lot of fintech companies who are looking at acquiring customers abroad. So there was this massive growth that everybody was after. And then there was this third trend of everybody becoming a super app. They wanted to start with one use case, but rapidly expand into multiple use cases and then offer the super app, because that's where the power of the user base comes in. And the fourth one was about focusing on the SME sector, right? So in addition to the traditional bank customers, it was also about how can we service the underserved consumers, the financially excluded ones, and the small businesses. So that's basically what we started the year off with. So just a bit of detail on each of these four. The first one on, fintechs enabling any company to become a fintech company. We saw the rise of banking as a service providers who are using their technology by providing a suite of APIs for others to build banking and payment products. Now, why is this important? If you look at how open banking has evolved in Europe, it started with the regulator coming up with this notion that banking should not be just open to the banks. There are other providers who are able to service the consumers better, and hence leveraging technology. There were a lot of companies who were building solutions that disrupted banking and payments as we knew it. We saw the rise of neobanks. We saw the rise of new payment technologies, whether it's in the remittance or P2M or P2P side. And all this was enabled by the adoption of new technologies that we saw a growth in. With that came a lot of banking as a service providers who realized that the traditional method of implementing products and solutions in payments and banking is slow, it is broken, it is heavily process oriented. There needs to be a better way to do this. So these companies, they started building capabilities which are plug and play for any company. So you think about a retailer, you think about an airline, you think about a rideshare company. All of them could easily access the underlying technology to enable banking and payments by working with these banking as a service providers. So we saw a significant rise of these types of companies as we entered the year, and at a global level, right? So open banking and PSD2 in Europe kind of, was a trigger to this. But then everywhere around the world, people realize that this is something that the market demands, not only because it is a large opportunity for the, entrants themselves, but also it makes life easy for the consumers. And hence there is a real opportunity of solving a pain point. The second one was we saw a lot of companies who were a lot of fintechs who wanted to grow globally. So when we see all these large deals that were coming through, most of them were built on a story that a company would start in a particular market, but soon their technology is good enough to grow in multiple markets and they are able to scale globally. So you think about any of the fintech providers, the large fintech providers, they all started on this rapid global expansion. Revolut is one example. So they started in Europe, but soon towards the end of last year, we saw news of them expanding globally into new markets, and everybody was focusing on that, on this global expansion, right? So that was the second trend that we saw. The third one, as I said, with this rising middle class population, and not only that, it was driven more by the mobile internet penetration, the smartphone penetration. So we saw companies, that are traditionally into, let's say, chat or into rideshare, looking at expanding their scope of services because they realized that gathering a user base by offering one service is a starting point. It's not the end. It is not what they really want to do. That is a starting point. But then given the massive opportunity of providing financial services to these user bases and leveraging on the previous two technology trends that I spoke about, they realized that building a super app was something that everybody wanted to do. So we saw that as a key trend as we entered into 2020. And similarly, focusing on the underserved consumers and SMEs. Uh, there was a lot of innovation happening in the consumer finance space, in the traditional or developed markets, but SMEs were also ripe for innovation in payments. They were having a lot of problems, whether it was about access to lending or having their payments done, supplier payments done on time, making it, cost effective. So we saw a lot of technology coming in to service these type of customers as well. So this is basically what we saw at the beginning of 2020 and what we were anticipating the year to look like. But how did COVID change this? At this, if you compare it to the trends that I just listed, we see that the trend of enabling companies to build payments capabilities and fintech technologies is going to continue. And the reason why it is so is because in light of the current situation, with the way the working landscape has changed, how we are all more dependent on technology than ever, so we expect that trend to continue, right? So people realize that there is an opportunity here. They don't want to be held back by the fact that movement is restricted or physical interaction is restricted, and hence the rise of these technology providers who are looking at payments and banking as service models. We expect that to continue. On the second one is where we saw a major shift, right? Because initially, when you think about all the VC flows that were coming in, it was all banked on this massive global expansion or user base growth. But we saw that the investment community started looking at it more carefully now, realizing that just by pumping money into acquisition of users or on marketing may not be the best approach. So there was a lot, and there is, I wouldn't put it in the past tense, there is still a lot of scrutiny when it comes to unlocking new funds. So what we would see is we would clearly see the winners come out of this particular situation, right? So the ones that are actually building real capability using strong technology, we still see a lot of money flowing into those. But then, this whole set of institutions who just wanted to pump money and grow user base without really having a clear vision on profitability or where the break even would be, or a clear roadmap into a return on investment for the investors, we see that coming under scrutiny. And on the third one, we again see that trend to continue, because the drive to digital and contactless is more so prominent now than ever. As Mastercard, we've been talking about contactless for the past 15 years, but the current situation served as a major trigger because people don't want to spend in cash anymore. They don't want to touch the terminals. They don't want to hand over their card to a cashier who is an unknown person here. So with that drive to digital and contactless, we see that this trend of amalgamation of use cases into a particular solution is going to become even more prominent, because everybody is now looking for solutions that help them conduct payments and business in a seamless manner, of course, but at the same time in a contactless and digital manner. So we see that trend to continue. And then the fourth one around startups or fintechs servicing the underserved and the SME segment. You must have seen in the news about how important the SME segment is and how important it is for us to support them in the current situation, because they are the powerhouses of growth for any economy, right? If you look at their contribution to GDP, if you look at their contribution to employment, it is still significant. You cannot really let that segment die. They are the most impacted for sure, because they haven't been putting up large cash reserves to wade through such a situation. That's not what they've been doing. They have been doing business in a manner which helps them run on a daily basis or on a weekly basis, and at the same time they are, as I said earlier, the powerhouses of the economy. So it still remains an important segment. If you see some of the announcements that we've made as Mastercard supporting the community, we made a $250 million announcement on providing resources for the SME community to help them wade through the crisis. Last week there was a specific announcement that we made in India, again supporting SMEs in that particular market. So we are standing shoulder to shoulder with the SME communities, fully knowing that they are important for the economy and we need to help them. So we see that everybody realizes this and everybody is, putting their might behind the segment. So we expect the fintech trend to continue. But at the same time, when you think about the needs of the SMEs, lending is a critical one. And if you need to have a good lending solution, you need to have a good scoring solution. The impact of the current situation is that all the traditional algorithms that were used for building scoring models have now significantly changed. People need to incorporate, the new normal into the AI or machine learning solutions that they have built. So there is a drastic change that every technology provider needs to account for to incorporate the current crisis or the change that has come out of this current crisis. We see it to be a temporary thing. Over time, obviously, systems will adapt, people will adapt, technology will adapt, and hence it will be, well embedded in order to account for the situation. But that's a temporary situational challenge that we see that has come up. On the funding landscape, right? We see that VC dollars are still being invested. Just in Q1, $10 billion worth of VC dollars have gone into payments, challenger banks, and B2B fintech. As I said earlier, the question is who is having that eye to to achieve profitability, and who is simply looking at using a user-based growth. So that's what will differentiate. If you have a clear business model, if you have a clear road to success, then the funding will follow. And then what we realized is that there is a continued acceleration of partnerships with financial institutions, because even the large financial institutions, they have suddenly been put into a situation where their traditional solutions or products are not good enough. If you think about, just take the example of acquiring customers, right? Or for credit cards or loans, it used to be a very paper-based process. It used to be an agent coming to the consumer to take the details, and then a very, very physical sort of an interaction. While everybody had been advocating about moving away from physical to digital in order to save on cost and make things more efficient, now it is not just about cost and efficiency, it is about safety and health. And hence we see that there is an immediate requirement for large financial institutions to roll out these new solutions. And knowing large institutions and the time it takes for them to build these capabilities in-house, it is not going to be viable. And thus the partnership approach becomes very, very important. Also, on advancing financial inclusion, we've seen a lot of announcements from governments who are rolling out programs to support the impacted community. And in order to make it effective, things need to be offered in a digital manner, in an efficient manner. When it comes to, let's say, funding for unemployed or funding for the SME sector, it needs to be fast, it needs to be efficient. You really can't rely on somebody walking up to an agent and then collecting their benefits. That's not an approach that is going to work. So we see a lot of technology that is supporting financial inclusion that has come up as a result of this crisis. And then the last point here is that necessity is a mother of invention, right? As I said earlier, in the fintech world, in the payments technology world, like I always say that I'm proud to work in this industry because it has been innovating at a rapid pace for a very long time. Compare our industry with any other industry, we are the most innovative. We look at new technologies, we take them as they come, and then try to build solutions in a very able and fast manner. So just look back to the 2008 financial crisis. So this is where the fintech innovation actually began. The idea of neobanks, the idea of open banking, all that came out of the 2008 financial crisis. So we see that all these crises may, or rather than may, would result in a lot of new technologies being invented, new solutions being developed, and we don't expect the situation to be any different. We see that. So I'll talk about a few examples as we go along. And this whole notion that necessity is a mother of invention holds true even in this current situation. So that's just about the trends that we see. Now, I'm going to talk about what Mastercard is doing, to support the fintech community. We last year launched an umbrella program called Mastercard Accelerate, which is our door of engagement with the fintech community. And when I say fintech community, I'm talking about different types of solution providers. So what we realized was that servicing a fintech, right, is not as easy or as what we used to do with the traditional bank or merchants that we have been doing for a very long time. There is a demand for increased speed. They're looking for scalable growth and greater flexibility, and they're looking for tools and insights. So everybody is now realizing the importance of data and how to monetize and make use of the data, how to make use of the resources that are available, whether it's APIs or new technologies. So we see that addressing this segment required us to look at new type of solutions. So under the Mastercard Accelerate umbrella framework, we created 4 broad sets of solutions. The first one is about licensing paytechs. And when I say paytechs, these are companies that are issuing cards or acquiring merchants, right? So typical B2C neobank type companies building digital first products. So for us to work closely with them based on the regulatory environment in a particular country or in a market, we wanted to change our approach to giving them a direct license or working with sponsor banks, make it faster, easier than what it was before. So the FinTech Express product or solution set was launched under that. And it also helps companies expand globally to make it easy for them to get licensed in multiple markets, which was unlike what we used to do earlier. The second program we have is StartPath, which I manage for Middle East Africa. So we realized that uh, a lot of new technologies are being created, B2B technologies that help enhance product value propositions of capabilities that we have within Mastercard, and also new technologies that are required by the customers. So through the StartPath program, we invite later stage startups to come and work with us. It's a 6-month virtual intensive program, and we give these startups access to scale through our customer network, and also access to working closely with Mastercard to build products together. So this is something that we started about 6 years ago. When we started, we used to look at early stage companies. We moved away from early stage to later stage because we found that to be the sweet spot of engagement as far as product development and offering solutions to our customers are concerned. When we started the program about 6 years ago, where we were working with early stage companies, we ran into situations where we bring a company into the program. 2 months down the line, we realize that they've run out of money, or they don't have access to enough resources to scale in multiple markets. So that became a bit of an issue for us. So we now moved into this later stage B2B segment through the StartPath program. The third one is Mastercard Engage, where we look at fintechs who are capable of becoming resellers of Mastercard technology. So whether it's a tokenization service, whether it's a remittance service, we look at these companies as technology partners. So they consume these technologies from us and help in deployment of these technologies with banks or other customers. And why is it important? Because we realize that over the past few years, we've been coming up with a lot of new technologies, and a large institution, whether it is a bank or a merchant, they're not fully geared to look at deploying these technologies in a fast and efficient manner. They need technology partners to support them in this journey. And hence, it was important for us to look at these companies, bring them into a program that we call Engage, give them access to our assets that they can deploy for our customers, and then it's a win-win-win for everybody. And the fourth one is our developer section. So again, I need not emphasize on the importance of APIs. We as a technology company are now taking an API first approach as far as our products are concerned. So for us, it was important to create this developer zone where companies could come and work with the APIs that we create and deploy them through our customers. So that's a completely dedicated division within Mastercard. There is a lot of work still happening. We have a lot of APIs in different stages of evolution, whether it's about, availability of a sandbox environment, or, the scale of the APIs across multiple markets. So we are on a continuous journey to improve that, to make it more relevant to, the services that are being offered by these fintechs. So that's what we created as part of the Mastercard Accelerate framework, which was announced last year. And just back to the point that we were highlighting about how partnerships are important, right? So we realized, and we've been hearing this for the past few years, that all senior executives at larger institutions, they depend on innovation for long-term success, but only a few of them believe that their institutions have a well-defined strategy or a framework in order to make this happen. So they all realize that it is important to, partner with startups and fintechs to bring new technologies. And it's also a way for them to test out these solutions, right? You don't need to get a 50 people IT team resourced and staffed in order to test a technology or do a POC. You could very well do it with a startup who's building this and test it out and see if it works, and then scale it either directly with the startup or then decide to build in-house. So all this became important in order to build partnerships, and that's what we've seen happening in the past, and we see that as a trend that continues in the future. So just a snapshot of what are the areas that we've seen in the Start Path program. When I talk about these technologies that we evaluate and that we bring on board into the program, these are, the broad segments that we see. So in terms of the breakdown, we see a lot of companies building solutions in the core, fintech space, which is about cross-border remittances, digital experiences, acceptance solutions, etc. But at the same time, there are a lot of companies who are focusing on improving efficiency using, let's say, blockchain or AI, building new customer experiences using augmented reality, and also things like, financial inclusion, driving engagement using data, and safety and security. Just on safety and security, again, in the current situation, it's become even more important as we rely more on technology. There are, points of failure when it comes to new technologies that are being developed. So as Mastercard, we very well understand that, and it is a core of our services. It is a core of our business to make sure that we focus and invest a lot behind safety and security in order to protect, the trust in our network and in order to grow. So through this, we've been creating transformative partnerships. We have more than 220 companies in the program that has joined us over the past 6 years. And these companies, after joining the program, have gone on to raise more than $2.6 billion in VC funding. So we understand that through these, numbers, we have bet on the right people, and we continue to do so through these partnerships that we build. I'm not going to spend too much time on this, but the idea that I wanted to highlight here is that we focus on delivering value through open innovation, whether it is, through partnerships like what we have with Bahrain FinTech Bay. We are talking about the importance of technology and fintech in general, but also ascertaining the fact that we educate and inspire the community. We work on, a global scale, and we help in structuring pilots for our customers, because it's important to make sure that we put our might behind these technologies to make sure they are successful and that they scale through the network that we have. Just, a few examples of companies that have started through our program and have grown. So Revolut, I'm sure you would have heard of. Then we have a company called Sensible that did, innovative bill management for SMEs that joined the program in 2018. We have Divido, which is a buy now, pay later solution that joined in 2016. So now buy now, pay later has become a big trend. So even, in 2016, we saw that Divido was working on such a solution. So we worked very closely with them to build these partnerships, right? So these are some of the examples. Now, specific to COVID-19, what we see are, let's say, 3 of the key trends, right? So I spoke about the importance of digital onboarding. So without elaborating into the specifics of these companies, the reason why I listed them here is to show you how, people have built technologies that help in addressing the current need. So digital onboarding we have a partner company called Scienzy. They're based in India. They look at not just providing, an OCR capability for ID reading. They also provide, liveliness check and also backend services for the customers to ensure that there are no, paper-based solutions that are required. Everything is digital end to end, and then the onboarding can be done in, matter of few minutes. Then next we saw that digital fundraising has come up as a key requirement, knowing that there are a lot of sections of society that are vulnerable and impacted, and it is important for the governments to support them. It is important for the private players in the system to support them. We saw that a lot of demand has come for digital fundraising and supporting, charity payments in a new way. So we've got a lot of solution providers who are focusing on doing this either through rounding up at merchants or providing, websites where this can be done in an easy manner. It helps in driving loyalty towards a brand, but also you are actually doing good for the society by embedding these new technologies. And the last one, what we realized is it is even more important today for people to look at management of their finances, right? We've seen a lot of job losses that have come up. We've seen, people getting pay cuts. So people are thinking about how can I look at technology to build a savings goal or a budgeting solution to make sure that I don't overspend. I get complete visibility of my expenditure just by going through, my bank statement or credit card statement at the end of the month and trying to make sense of what all those transactions are is not good enough. So it needs to be supported by technology that makes these solutions readily available at the fingertips of the users, make sure that the users are able to track their spending, make sure that they are able to efficiently manage their finances, work for what they want to achieve, and rather than spending uncontrolled or in an unstructured manner, how can we make this more efficient? So we see that also as a key trend that has come up in the community of fintechs that we work with. So broadly, that's basically what I wanted to cover in this session. And the idea was to give you a sneak peek on what Mastercard is doing in order to support the community. We can have like dedicated sessions on each of these, like each of the technologies that I spoke about, or each of the solutions that Mastercard has built under the Accelerate umbrella in itself are, an hour-long session. So we don't have time to cover all of them in detail, but this is just to give you a sneak peek and to give a sense of what Mastercard is doing to reascertain the fact that Mastercard realizes the importance of the fintech community and that we want to work in close conjunction with this community, building partnerships, building solutions to make it easy for us to not just wait through this crisis, but also to build long-term sustainable solutions that can, help us overcome this current situation.
Absolutely.
So thank you for that.
Yeah, thanks, Shyam. I've got some actually interesting things that we picked up, and please, anybody in the audience that's listening, please go ahead and ask questions. I have a couple that because you touched briefly on we're saying that have fintechs been quick? They've been quick to respond to the current situation, but are they being tactical and thinking about some of the ideas you said long term? More importantly, I think that's something that we wonder. You said 2008 the fintech started with this thing, and is it always as a response in that sense to current situations, or is it like, do you see it being like a long-term impact now?
Yeah. So there are a couple of things to this, right? One is there are a lot of companies who are being tactical about the situation, and rightfully so. So they realize that it is in their capacity or capability to build solutions to address the needs, the immediate needs. We see that happening. But at the same time, we see a strategic shift in consumer behavior. So I was referring to contactless earlier, right? So contactless in e-commerce, I'm sure you must have read on how that trend has changed. Those people, or those sections of society, be it the elderly or people who never really believed in contactless or e-commerce, have now started moving towards these type of transactions because they realize it's a matter of health, and it's not just about, oh, there is this new technology, I can't make head or tail of it. It's that narrative has changed. So we see that this current situation will result in a long-term consumer behavior change. So the technologies would also need to follow that behavioral change. So to answer to your question, yes, there are a few tactical situations that help some of these fintechs build solutions in the short term, but there is a strategic shift in consumer behavior. There is a change in the way people are behaving that help them prepare for the future and make sure that the solutions that they build are sustainable in the long run.
Yeah, I definitely have to agree with that. You know, I mean, we didn't touch really much upon financial institutions and Blakely, how's the partnership changed in terms of financial institutions and fintechs?
Yeah. So let me just take, digital onboarding as an example, because that's the most prominent one that we've seen, where when the crisis started. So the example that I spoke about is of a company called Signsy that is in the program. So they've been in the program for the past 2 years, and we've been, talking about Signsy to a lot of our customers, introducing them and trying to have conversations and then deploy these technologies, right? So it was all going fine, but when the situation of COVID happened, we suddenly saw a lot of inbound requests for solutions such as digital onboarding and things like video KYC. As I said, banks realize that they can't send their sales agent to, get the documents from a customer or get them physically verified. So video KYC became a big thing. Now, video KYC in India, for example, the Reserve Bank, which is a central bank there, approved video KYC as a service in January of this year. But all of a sudden, we saw a lot of inbound requests for some of these technologies that I just highlighted.
Yeah.
So while we were seeing all these fintechs, knocking on doors, trying to get these conversations going, trying to sell these technologies, we saw that the demand for partnerships became really strong through the amount of inbound leads that we were getting. So when large institutions are faced with such situations where they have to act in an immediate manner, again, knowing that they have complex processes and procedures internally, just getting business cases approved is not an easy task. So they look for support from the external community, and that is where these fintechs and technology providers become very important in the ecosystem, because they are able to build these partnerships and deploy solutions in a quick and easy manner, which is exactly what the need of the hour is. So we've seen that happen with the large financial institutions, and we would expect that as a trend to continue, because again, it's a wake-up call. It's something that has change the mindset of how people think about adoption of technology, and we expect that to continue.
Yeah. Well, thank you for that. I'm just asking for the audience if they have any questions so far. I think that everybody's we have one person on board who's studying fintech as well, who's in the chat. I mean, I guess what advice do you so we have some potential fintech people out there. What advice would you give them in terms of like how they would look to it? I mean, he's a university student in Algeria and he's doing research. Like, what advice would you give to someone who's considering like, starting a startup in general?
Sure.
From your experience working with startups.
Yeah. So again, having worked with startups in the industry, so I can talk about experience from, the industry. We see that if you are able to build a strong technology, don't be, don't be concerned about whether you will find funding or whether you will find the right resources or teams or not. This is something that we've seen in the past, and even in the current crisis situation, we've seen that startups who are building interesting technology continue to get funding, right? So you see the news every day about, millions of dollars of funding going into fintech. We see that happening. We don't see that to be, changing. But the advice that I would want to share, as I was mentioning earlier, is that unlike what was happening a few years ago, don't just focus on this, enormous growth of user base that you think will help you get an exit later or, go for the next series of funding. Always have that path to profitability in mind. So that's one thing that I can share as a key advice. And we see that as a requirement from the investor community these days, more so than what it was in in the last year or in the years before. The second one that I would want to emphasize on is, since this gentleman is talking about doing a PhD, so
Yeah.
be very close to all the new technologies that are coming up. We've seen continuous innovation from fintechs, right? So anybody who started a company, let's say 3 or 4 years ago, they've also gone through the motions of pivoting and adopting to new technology. And that's mainly because they've always understood that whatever they do today may be relevant tomorrow, may not be relevant tomorrow. So this keenness towards understanding how the consumer landscape is changing, how the technology landscape is changing, and adapting yourself to that becomes very, very important.
Yeah.
Right. So those are, I think, the two key things that I can share.
Yeah, I think that's great. And we have Naman Aurora who's asked a question here. He's like, what are some lessons to be learned from this pandemic for early and late stage fintech startups? You've kind of mentioned about early. I think maybe you want to come on some
Sure.
lessons that they've learned for late stage.
Yeah. So on late stage, what we've seen is we see that there is still a lot of demand for B2B technology providers, right? So the way the situation has changed is that when you look for scale growth, traditionally, as I said, it was about finding that VC who's willing to pump in millions of dollars for you to acquire users. That has changed. They know that the way the scale growth is going to come is through partnerships with existing institutions who have large base of customers. So in the later stage setup, we see that there is a lot of interest in B2B technology providers. And I'm not discounting the B2C space, right? There is still a lot of interest in the B2C space. But if you look at the ratio of interest, we've seen a spike in the interest for B2B technology companies in the later stage area, as opposed to the B2C B2C kind of environment. So that is one, right? The second one is, again, think about how well you are in order to how well set up you are in order to look at an API based approach. The larger institutions have realized the importance of changing their models from traditional core banking systems or card management systems to improve and enhance the capability to look at some sort of an API orchestration layer to consume new services. So this whole API first approach is growing more important, and thus as companies you should also ensure that whatever you do is in line with this shift that is happening. So those are, I think, two important pieces of observations that I have.
Yeah, thanks for that. So we have Naif. Hi, Naif, from Al Baraka Bank. He's basically saying, first of all, welcome. Nice that you said hi and you raised your hand in the beginning. He's saying we can see that eKYC is on its way to accommodate retail clients. When do we expect to address local, corporate, and overseas clients?
Sure. So this is a question that has, this is an area that has a large dependency on regulations, right? So when it comes to corporates, we see that eKYC in the corporate space is picking up. We see that eKYC in the SME space is picking up. So for example, large acquirers have started looking at eKYC for onboarding merchants. And the example that I spoke about, Scienzy, which is a player in India. So they work with the likes of, large PSPs in the market to onboard merchants. So it's not just about consumer onboarding, it is also about corporate and SME onboarding. The key difference here is that consumer onboarding is fairly easy because when you think about these eKYC technologies, they rely a lot on AI and machine learning. So you might have a passport copy or a local ID, whether it's the Emirates ID here or a civil ID or an ICAMA, whatever it is. It's easy to train your technology using these IDs. But when it comes to corporate onboarding or merchant onboarding, the requirements become even more complex. You're looking at things like trade licenses. You're looking at, MOUs or articles of association, partnership agreements between, between entities and other institutions. So it becomes a lot more complex, which means you are moving from a structured document onboarding to an unstructured document onboarding. Technologies are evolving in order to read unstructured documents. The time it takes to train a system for reading unstructured documents is higher, but it doesn't mean that it is not happening. It is happening. We've seen a lot of technology providers who use their technology to read unstructured documents, and that's where they are focusing on corporate onboarding and merchant onboarding as opposed to consumer onboarding. So we are seeing that happening. We've seen a lot of regulators looking at this, a lot of institutions rolling out this service for onboarding corporates and merchants. And as I said, it's a matter of regulators themselves understanding the importance of eKYC. Obviously, when it comes to any new technology, as a regulator, they are supposed to assess and weigh the risks and understand how this is going to pan out. It is not an easy task for a regulator to adopt every technology that comes their way. They need to really understand the nitty-gritties of it, assess it in an efficient manner. So we see that is happening. But to answer to your question, we see that shift towards unstructured document onboarding happening. There are a lot of institutions who've started doing it, and we expect more technologies and institutions to follow this trend.
Thank you very much. Well, I guess last closing comments is just, what are your thoughts on ahead on the future post-COVID and beyond? And just as a closing thing to everyone, I think we have one more question as well. But I guess we can get to my question because this one might be a little bit before that. Anonymous attendees asking, do you think banks have been adopting fintech technologies fast enough? He feels that they weren't. Perhaps I would say this is true as well. Many feel that they were not prepared pre-COVID, and now rushing to put together. I mean, I think you kind of answered it in some of your things, but again, that ties in with my question as well. Is like, and ahead, how can financial institutions, not just banks in general, in terms of all, how can they be better prepared? Because this has thrown us into being the situation.
Correct. Yeah. So I don't have, a crystal ball that can help this answer in a very, succinct or accurate manner. But the way I see things have happened over the past few months is that if you have a digital first strategy, if you have a strategy that is built on technology, there is nothing better than, having a technology that can help you adapt to new situations, right? So COVID is just one thing. We don't know what's going to happen next year. It could be something completely different, right? It could be positive, it could be negative, it could be the same. But we've seen that the ability of some of these new technologies to help institutions and fintechs pivot in an easy manner, right? So that's really underpinning the change in direction for most of these technology providers. And even linking it to the question that was asked about how banks are adopting, is it fast enough? The answer is you are right. I mean, we were all, suddenly thrown into the deep end with the current crisis without being prepared for it. But again, as I said previously, we all learn from this, right? So we know that when such a situation would come next time around, we will be better prepared for it because we've made the fundamentals ready, right? We've ensured that everything is going to be digital first. Everything is going to be focused on technology. And this is where the real change in direction has come, which will help us, which will help us go through this crisis and also into the future and adapt to any new situations like this that may come about.
Absolutely. Well, thank you everyone for joining us. I guess if there are any more questions, Shyam, a big thank you for joining us from Mastercard and being with us here. I think we learned a lot about how, collaborating with FinTechs and the response in general to COVID-19. And we hope that, in the future, things will get better and everyone will be safe and sound. Until then, thank you everyone. Again, if you want to contact ourselves or speak to Shyam as well, please email us at info@bahrainfintechbake.com and we'll get to you and we'll answer you and hopefully we'll see you again, Shyam, soon.
Thank you, Susie, and thanks everyone for joining. Have a good day.
Bye. Have a good day. Bye-bye.